A lot of people think their savings account is the only place they can keep their cash. And if you're one of those people, you're missing out on a lot of money. That's because as interest rates go up, the rates offered by high-yield savings accounts and CDs are also increasing, making them a great place to park and grow your money. So today I want to focus on CDs and go over what I believe are the best ones currently available, offering over 5% interest for your money. We'll also go over the pros and cons of CDs, alternatives, and more, so make sure to stick around until the end if you want your money to grow. For those who don't know, a CD or certificate of deposit is a savings product that earns interest on your money for a fixed period of time. They're offered by banks and credit unions and provide a higher rate than a savings account because you're required to keep your money in them for a set period of time like 6 months, a year, or even longer. Usually the more money you put into them and the longer you keep your money in a CD, the more interest you'll earn. However, some banks are offering lower rates on their long-term CDs lately because they expect the Fed to cut rates in the future, which means you may be able to get a higher rate of over 6% on a shorter-term CD as you can see on the screen, allowing you to earn a higher rate in less time. Now let's quickly cover the pros and cons of buying CDs. The first pro is that it's a safe investment because you're guaranteed to get your money back in full plus interest. They're also FDIC insured for up to $250,000, so your money is safe up to that amount. Their interest rates are usually also higher than high-yield savings accounts because you get to lock them in for a set period of time, which in my opinion could be good but also bad. It's bad because if rates increase, you might be earning less, but it's also good because if rates go down, your CD would be locked in at a higher rate. The first con is that you get penalized for withdrawing your money early. Investing your money somewhere else could generate higher returns. CD rates may also not be high enough to keep up with inflation, and they offer less liquidity if you need to access your money in case of an emergency. All in all, people choose CDs when they have a specific savings goal and don't need instant access to their money because it's a good way to earn extra money without taking risks. So now that we're all on the same page, let's dive into some of the best CDs with the highest interest rates you can get today. First up on the list is Capital One. They offer 9 CD terms ranging from 6 to 60 months. You can earn 4.75% APY on their 1 year, 4.3% on their 2 year, and 4.1% on their 5 year CDs. The best part is that there's no minimum deposit required to open or maintain these accounts. What's cool about Capital One is that they give you the option to decide when your CD interest rate gets paid out. It could be by the end of the term, monthly, or annually. So you can use that money on whatever you like, or you can keep it in the account and earn more interest on it. Now, the maximum you can deposit into a Capital One CD is $1 million, which I don't think will be a problem for most people. I mean, if you have $1 million, you're better off investing that money elsewhere for better returns anyway. Now, Capital One's penalty for an early CD withdrawal of 12 months or less is 3 months of interest. And for CDs greater than 12 months, the penalty is 6 months of interest. Depending on how early you redeem your CD, the penalty may be greater than the interest you have earned on your account, so keep that in mind. When the CD matures, you'll have a 10-day grace period to redeem it without penalty. Capital One also allows you to add up to 10 beneficiaries to the account, which is a nice bonus in case, God forbid, anything happens to you, your family can collect any money in the account. Moving on, to open a CD account with Capital One, you must be a U.S. citizen or lawful permanent resident with a U.S. physical address. You must also be 18 years old, have a social security number, and have a U.S.-based phone number. ITINs are also acceptable if you open your account at branches or Capital One cafes, and the linked account you use to deposit money into your CD must be a U.S. bank. All in all, I really like Capital One. They've been around for a long time and they offer a ton of financial products from credit cards to high-yield savings accounts and more. I actually bank with them and I'm currently earning over 4% interest on my high-yield savings account, which is amazing. So if you're looking to lock some money in a CD and earn almost 5% interest on it, one of Capital One CDs might be a good option for you. But don't be quick to settle because there are other CDs on this list that can earn you even more than that. Next, we got Bread Savings. This online bank offers 5 CD terms ranging from 1 to 5 years. You can earn 5.25% APY on their 1 year, 5% on their 2 year, 4.5% on their 3 year, 4.35% on their 4 year, and 4.25% APY on their 5 year CDs. So for example, if you deposit $20,000 in a 1 year CD at a fixed rate of 5.25%, you'd earn $1,050 that year. Now, what's cool about Bread Savings is that they reward loyal customers by offering them higher renewal rates for 1, 2, and 3 year CDs. So if you get any of those CDs and you let them automatically renew, your interest will increase by a few points. Moving on, the interest you earn will be compounded daily and credited to your account monthly. So you can withdraw your interest without any penalties, which is really nice. The early withdrawal penalties for this account are the following. For terms shorter than 1 year, the penalty is 90 days of interest. 1 to 3 years is 180 days of interest. And for terms 4 years and up, the penalty is 365 days of interest. Some other things I'd like to point out are that there's a minimum opening deposit of $1,500 to open a CD, and it must be deposited in a single transaction. There's also a maximum deposit limit of $1 million per account and a $10 million limit per customer. And just like Capital One, you'll get a 10-day grace period after the maturity date to withdraw the money from your CD without penalties. Next, we have Synchrony Bank. They've been in business since 2003 and offer credit cards, high-yield savings accounts, and some very interesting CDs with amazing rates. They have 3 types of CDs. The regular ones range from 3 to 60 months, and the other 2 are 24 and 11-month CDs. There's one called the Bump Up CD for 24 months where you can earn 4% APY that gives you the option to increase your rate during the term of your CD. So if during your term rates increase, you can ask for a bump up once. None of the other banks we've gone over let you increase your APY once it's locked up, so this is a nice feature. Moving on to their regular CDs, you can earn up to 5% APY with no minimum balance depending on the term you choose, with the 6-month and 18-month CDs offering the highest APY. They also have a no penalty CD for 11 months with no minimum balance, where they literally let you withdraw your money without penalties after the first 6 days of funding your account, which gives you more freedom and flexibility while also allowing your money to grow. Now, while this may seem like a good option, you might be better off depositing your money into a regular high-yield savings account. For example, Synchrony offers 4.3% APY on their high-yield savings account, and SoFi, one of my personal favorite banks, also offers 4.3% APY, with less restrictions when it comes to withdrawing your money. So always make sure that the interest rates on a CD are higher than those on a high-yield savings account. That way you can make the most interest out of your money. Anyway, the early withdrawal penalties for terms of 12 months or less is 90 days of interest. 12 but less than 48 months is 180 days of interest, and terms of 48 months or more will be 365 days of interest. And just like the other options, you can withdraw your interest early without any penalties. Next, we have Quontic Bank, an online bank founded in 2009. They offer 5 CD terms ranging from 6 months to 5 years. But where they shine the most is in their 6-month CD, which offers 5.05% APY, and in their 1-year CD, where you can earn 5.15% APY. Now, there's a minimum deposit requirement of $500 to open these CDs, but that's pretty low compared to other banks. Your interest also gets calculated daily and paid to your account monthly, and there's a 10-day grace period for you to withdraw your money from your CD without any penalties. Moving on, the early withdrawal penalties for 6-month terms are 6 months of interest, 1 year is 1 year of interest, 2 years is 1 year of interest, 3 years is 2 years of interest, and 5 years will be 2 years worth of interest. So yes, although this bank offers high rates, they also charge very high penalties for early withdrawals, which may eat up all of your interest in some cases, so keep this in mind if you want to buy a CD here. Last, we got Discover Bank, a full-service online bank offering credit cards, banking loans, and other financial services. They currently offer 12 CD terms, ranging from 3 months to 10 years. You can earn 4.75% APY on their 1-year term, 5% for 18 months, 4.3% for 24 months, and the list goes on. The best part is that Discover doesn't charge any maintenance fees. However, there is a minimum deposit requirement of $2,500 to open these CDs. Anyways, Discover's early withdrawal penalties for terms less than a year is 3 months of interest, 1 to 4 years is 6 months of interest, 4 to 5 years is 9 months of interest, 5 to 7 years is 18 months, and 7 to 10 years is 24 months of interest. Now, unlike the rest of the banks on this list that give you a 10-day grace period, Discover only gives you a 9-day grace period. All in all, Discover has been around for ages, and their CD rates are very competitive. I currently use them for my rental property and have never had any issues with this bank, so their CDs might be a good option for some of you. The last thing I want to say is to look at all your options before deciding to put your money into CDs. Although they may be a nice way to grow your savings, they also come with early withdrawal penalties. So if you ever have an emergency and you need to take out your money, it's not going to be as easy to liquidate it because you'll get penalized for taking it out early. So some alternatives to CDs are high-yield savings accounts, which provide both liquidity and high interest rates, Treasury bills, which offer great returns based on the terms you choose. You can also buy index funds or even invest in income-producing assets like real estate rentals. Just always compare your options to determine the best choice. Like I mentioned earlier, many CDs offer similar interest rates to high-yield savings accounts. So instead of locking your money up in a CD, you might be better off parking it in a high-yield savings account where you can access it whenever you need without any penalties. Some of my personal favorite high-yield savings accounts right now are SoFi, which currently offers 4.3% APY, and the Capital One 360 Performance Savings Account, which is offering 4.15% APY. But there are many other high-yield savings accounts you can look into. You can learn more about them by watching this video next. Overall, CDs can be a great option for anybody who can commit to leaving their money untouched for a fixed period of time in exchange for potentially higher interest rates. But also know that they aren't the only way for you to earn interest or grow your savings. So there you have it, peeps. Let me know in the comments which one of these banks and CDs you think is best. Or if you have any alternative suggestions, share them with us as well. And if you made it this far into the video, comment the word CD so I know who my loyal besties are. And by the way, Rakuten, my favorite shopping portal for earning cash back on a ton of popular stores, is offering a limited time sign-up bonus of $30 after you spend $30. So make sure to check out the link in the description to get your free $30 today. As always, that's the best way to support the channel. I love you guys. Don't forget to share, like, subscribe, and turn on those post notifications. That way you don't miss out on any future uploads. And if you guys enjoyed today's video, make sure to watch these other ones next. Okay, bye now.